My name's Matt Temin. I went from $45,000 in credit card debt, selling final expense and life insurance, to making over $7 million this year in the Medicare and health insurance niche, with the power of staff and a team and good marketing. So today I'm going to go over, should you sell life insurance? Should you sell Medicare? Should you sell health insurance, annuities, everything in between? What is the best path for you? So to give you a bit of a background on me, is I started out in the life insurance space. I started with a big IMO that a lot of you guys have heard of, selling mortgage protection, final expense. I was traveling all around the Midwest. I live in Springfield, Missouri. I was traveling to Kansas City, Lincoln, Nebraska, Omaha, Nebraska, Minnesota, Wisconsin, Dallas, Texas, chasing these things called mortgage protection leads because there's a reason. They're good leads, right? So I would get them, I would call them. This was 5 or 6 years ago. Telesales wasn't quite as common as it is today. It was still a thing. I just didn't use it. So I would go around, I would buy these leads. They were anywhere from like $50 to $70 at the time, but they were good, and that's why you buy them. And so I would travel around. And my first year, I sold in the ballpark of about $180,000 of annual premium of life insurance, which is pretty good. There's some people that sell $500,000 their first year. So is it the best? No, but it's a solid first year in the industry. At the time, I was 21 or 22, hadn't done a lot in my life, came from a small town, and just was trying to figure out what I wanted to do. And I got into the insurance business literally applying to an ad on Indeed. So I thought I was applying to a job. Turns out it was a insurance position, which worked out well in my favor. It took me a while to get licensed, but I started selling and it was going good. At least I thought. I was just looking at how much money was coming into the bank account. I wasn't necessarily tracking my net income or how much I was spending. So I was spending a lot, but I was bringing on downlines. So I was bringing on agents, and if you don't know how that works, let's say I'm at 100% commission, I would bring them on at say 80. If they sold $1,000 a year policy, I would make the percentage difference. So I would make 20% of that. They would make 80 because I'm going to train them. I'm going to help them. I may even buy them leads. So I had I built a hierarchy to about 150,000 a month, which is nothing crazy, but it was bringing in some solid money, and I thought all was well. But I was racking up a good amount of credit card debt at the time. I was putting a lot of leads, a lot of travel, a lot of hotels on credit cards because I wanted to build something. If you know me, which I'm sure if you're watching this, you probably don't know me, but if you know me, you know that I like to build things. I like to go. I like to progress. I like to just go and build. And so I wanted to build a downline, and I wanted to build a lot of agents, and I wanted to help them become successful. So I would buy them leads to get them going. Well, the straw that breaks the camel's back, eventually that credit card racked up enough, and I got what's called roll-up debt. So let's say you have a producer that you bring on, you contract them, they sell a policy for $2,000. They get $2,000 of commission fronted to them. That policy cancels. Guess what? If they don't pay that debt back to the insurance company, it goes to the upline. So I got rolled. It was a conglomerate. It was like a small agency that rolled me about $30,000 of debt, and to this day, it still haunts me, which is so great. Like I still get roll up debt from that somehow, some way. I still do. But I wouldn't take it back. Like I would still do that. It was a good experience. It taught me a lot about the industry. But at the time, $45,000 of credit card debt, not a lot of money in the bank, no assets, nothing to lean on. Definitely wasn't going to ask other people for money. I was looking for something else. And so my upline at the time, we all decided to go into Medicare. And I started doing that. And so I started selling it myself. I went into the home. I, would sell policies, mostly Medicare Advantage at the time, some supplements here and there. I transitioned from a lot of direct mail leads, once I had a couple hundred policies under my belt, into seminars. So was I profitable that first year or so? Maybe a little bit because I sold probably in the ballpark of 350 to 450 new clients that year. I mean, if there was a time to work, that's probably the hardest I ever worked because I got every lead source I could. I was still selling a little bit of life insurance for the front end commission, but I got every lead I could. I got every Turning 65 lead. I got every direct mail LIS and DSNP lead. I got every mortgage protection lead in the area. Any final expense lead, because I was like, if I sell them final expense, I can sell them Medicare. So I was still selling life insurance to make that upfront money to continue pushing down the Medicare route. And also bringing on agents at the same time on a downline basis, not necessarily what I have going on today, but on a downline basis, meaning they would run their contracts through my hierarchy. I would help them, I would train them, I would support them, help them with marketing, because that's what we've gotten good at is strictly the marketing side. Um, and just be there for them and help them and assist them. And then I would make overrides off of that. So first year sold about, let's just call it 400 policies. I could look back and see, although I didn't have good tracking at the time, so I don't know if I can be truthful to what those numbers are, but it was probably in the ballpark of about 400 clients that year because I had an appointment setter. I was getting every lead, no demand, and if you're in my office, we have a sign that says "We do what's required." That was a time in my life where I just had to do what was required to win, and that was spending a solid 3 to 4 grand a week on leads. I hired, with an appointment setter on top of that at probably 600-700 bucks a week. But I was selling a lot of insurance at the time. Personally, my downline was growing with Medicare agents, and so then I talked to a good friend of mine, and they're like, "Hey, like you should hire staff. You should get an office." And I'm like, um, that's probably a good idea. So let me try it. And I'm a guy who's going to do things whether I should or should not, from a financial perspective. So at the time, I locked down an office with $13,000 in my checking account, in my business checking account, which may depending on who you are, may sound like a decent amount. But whenever you start a business, $13,000 is nothing. It is absolutely nothing. So should I have gotten that office at $2,000 a month? No, but I did it anyway, and then I had the production to support it. So I did that. Brought on my first employee about 6 months later, and since that year, that first year in Medicare, I made about 400 grand. Probably still didn't net a ton because I was just rolling it all back into the business, and that's whenever I started to look at this thing like a real business. Like, yes, prior to that, I had bought leads and invested in the business and stuff, but then I started looking at, hey, how do we create leverage within this situation? How do we hire a team that can sell the policies and service the policies so that I can work on the bigger things like marketing or relationships or whatever it might be? And so about that was like 3.5 years ago. Actually, it was 2.5 years ago. And since then, we've grown to 4 offices in the last 3 years: Springfield, Missouri; Joplin, Missouri; Lake of the Ozarks, Osage Beach, Missouri; and Kansas City, Missouri. We have offices in all those places. We routinely sell about 700 to 900 policies every single month, with actually all of those being LOA policies to Temin Insurance, my company. And so, how I got there in between is I hired an admin and I still continued to sell at a high level. And then I hired a salesperson and I trained them while I was still selling my butt off. And then I hired another person and then I was still selling my butt off. And this was the time in my life where I was working the hardest I ever have, because nowadays, I'll just be honest with you, I don't work as hard as I once did. There are times when I really put my mind to the grindstone and really, really, do what's required, if you will. But that was the time in my life, those 2 years between transitioning from final expense to having 3 to 5 staff was the hardest I have ever worked in my life. Saturdays, Sundays, nights, weekends, it didn't matter. And I was also developing myself at the same time. I would go to conferences, I would learn, I would buy mentorship, I would create relation. I would specifically buy things solely to meet people who had done it, meet people who had gone faster or were doing bigger things than me. I would buy a mastermind. I would buy consulting. I would buy the things solely because I knew that I wanted to go fast. And so you fast forward 6 years ago to today. This year we'll be on pace to do about $7 million in revenue, maybe eight. Depending on how the year ends, maybe eight, with the 4 offices. And so we have a conglomerate of about 35 staff. It's a great business, and none of that would have happened if I never made the transition from life insurance to Medicare. I would probably still be recruiting for life insurance, or maybe not even be in the industry. But the difference is that when I was selling life insurance, final expense mortgage protection, I got paid once. When we sell a Medicare policy, I get paid forever, as long as that policy is on the books, and that is the difference. It's not which one pays more now. It's not which one pays more later. It is I sell something once and I get paid over and over and over again. And if you look at any calculations, any accounting, lifetime value on a Medicare policy is about 50% more than a life policy. And that's normal numbers, not with good persistency like what we have in our office. And so if I were to make a recommendation to you, if you're looking at this, you're saying, hey, I don't know which one I want to do, or I'm currently doing one or the other, I would get into residual based sales. Maybe it's health insurance. Maybe it's doing assets under management where you get the 1% for life. Maybe it's Medicare. I don't know what it needs to be for you, but there's got to be more than a one time payment, else you will work until you die. Now, there's a stipulation of that. You could build a business that's based off those one time payments and it could be a scalable thing. But if you ever want to sell that business, guess what kind of multiple you're going to get? It's insurance. You're going to get a solid multiple, but you might get 6 to 8 times EBITDA. In the Medicare space, you can get 10 to 15 times EBITDA. And if you're really, really good and you have a really good product market fit to like the acquirer and what you can do for them, I think you can go higher. I think you can do more than 15. There just may be earnouts on the back end. So if you want to build something, you want to scale something, and I'm not talking recruiting, I'm talking in office, employees, things like that. I've never, and look, I'm 27. Take everything I'm saying with a grain of salt. I haven't been in other industries. I haven't done anything in real estate or mortgage or solar or anything, but we've gotten good at hiring. And when I say we, I mean my team. They've gotten good at hiring. I have not hired that many people, if I'm being honest with you, but my team has gotten good at hiring. We've gotten good at marketing. So I was kind of the marketer the entire time. I I still kind of lead the marketing department, but now I have a media buyer. We have a person who runs our mail house. Um, that is slowly transitioning, right? We got good at hiring. We got good at systems. We got good at marketing, recruiting, and sales. I mean, we have a great sales team. So if you're wondering, hey, should I sell final expense? Should I sell Medicare? Which one should I do? The facts are is when I was selling life insurance, I had 40 grand on my credit cards, and we're on, now like it's crazy to say multiple millions of dollars net worth with a business that is worth a good amount. Like I don't equate my business and my net worth, but the business is worth some 8 figures plus for sure. So that's the difference for me. Of course, I've had more time in Medicare, so you can't equate the time the same, but that's just my experience. If you have any questions, feel free to reach out to me. Also, if you're looking for a home, if you're looking for someone who can help you grow, who can help you market, who can help you hire, guess what? We've done it. We've grown to almost 40 employees. We've grown to almost $8 million of revenue. If there's someone who can show you how to do it, it's someone who's done it. And so if you're looking for someone to help you sell Medicare, someone to help you sell other things, and if you're missing the marketing piece or the systems piece or the hiring piece, we'd love to help. So there's going to be a link in this video, to see if we can help because it's not always a fit. But that's my story. Again, negative 40,000 on the credit cards to now doing $7 million this year, maybe eight, with a maybe 12 million on the horizon for next year. So I hope this helps, and I hope this story is inspiring to you so you can do similar things.